Welcome to Market Insights. Today, we dissect one of the most potent forces in finance, the power of time and compounding. Often hailed as the eighth wonder of the world, compounding is the engine that can transform modest beginnings into substantial wealth. This isn't just theoretical. It's a practical reality shaping the portfolios of successful investors worldwide. In a world obsessed with instant gratification, understanding and harnessing compounding is more crucial than ever. We'll explore why patience and a long-term perspective are not just virtues, but essential ingredients for financial success. We will explore the mindsets of investing giants like Warren Buffett and look at the data behind the old adage of time in the market versus timing the market and how it could impact your portfolio strategy now and in the future. The concept of compounding isn't new. From ancient grain loans to modern-day investment accounts, its principles have been at play for centuries. The post references Einstein's alleged quote about compounding being the greatest force in the universe to highlight its profound impact. Consider the historical performance of the S&P 500. Over the long term, it has delivered impressive average annual returns. However, these returns are not evenly distributed. Missing just the 10 best days in a decade can dramatically reduce overall performance, sometimes cutting returns in half. This underscores the importance of staying invested through market fluctuations and avoiding the temptation to time the market. The first 1,000 is the hardest because it requires initial capital and potentially a change in mindset. The last 1,000,000 is the fastest because the base of your investments have grown so exponentially that it requires less effort to see substantial growth. Compounding works by Today, we dissect one of the most potent forces in finance, the power of time and compounding. Often hailed as the eighth wonder of the world, compounding is the engine that can transform modest beginnings into substantial wealth. This isn't just theoretical. It's a practical reality shaping the portfolio. Over the long term, it has delivered impressive average annual returns. However, these returns are not evenly distributed. Missing just the 10 best days in a decade can dramatically reduce overall performance, sometimes cutting returns in half. Predict market peaks and troughs to buy low and sell high. While the latter may seem appealing, studies consistently show that it's extremely difficult, if not impossible, to do successfully over the long term. Missing even a few of the best trading days can significantly diminish returns, negating any potential gains from successful market timing. So, how can you harness the power of time and compounding in your own portfolio? First, start investing as early as possible, even with small amounts. The earlier you begin, the more time your investments have to grow. Second, focus on consistency. Regularly contribute to your investment accounts, even when the market is down. This allows you to take advantage of dollar-cost averaging, buying more shares when prices are low. Third, adopt a long-term perspective. Avoid making emotional decisions based on short-term market fluctuations. Instead, focus on the underlying fundamentals of your investments and stay disciplined. Fourth, consider diversifying your portfolio across different asset classes to reduce risk. Finally, reevaluate your portfolio periodically to ensure it aligns with your long-term goals and risk tolerance. Remember, the goal is not to get rich quick, but to build wealth steadily over time. In conclusion, the power of time and compounding is a force to be reckoned with. By understanding its principles and applying them consistently, you can significantly enhance your long-term financial outcomes. As you move forward, keep an eye on key economic indicators such as inflation rates, interest rates, and GDP growth. These factors can influence market performance and impact your investment returns. Also, stay informed about developments in your chosen investment sectors and adjust your portfolio accordingly. Remember, investing is a marathon, not a sprint. Patience, discipline, and a long-term perspective are your greatest assets. Thank you for joining us on Market Insights. Until next time, invest wisely and stay informed.